Hi guys, hope you guys are doing well. In today's video, what we're going to go through is identifying direction across different markets. So we'll be going through how to find direction, how to find direction in different markets, how by going through the major markets within that asset class to establish which markets are overall strong and which markets are overall weak. We'll be going through an example in the foreign exchange market, as well as one advanced example in using the stock index to establish a high probability trade on a stock. So these are the steps. So essentially, you want to go through the key markets within the asset class. From those key markets, you want to create a watch list. And from that watch list, you're going to be looking for trading opportunities. Now, the way you want to be filtering these trading opportunities are essentially by looking at asset classes that are meeting your rules to trade with. So, for example, if we're trading an intraday strategy, or if you're using an intraday strategy, you want to find a market that meets the rules for that strategy. Or if you're doing end of day, then find a market that meets the end of day rules. Your technical analysis will apply once you've created your watch list. And that's essentially when you're going to be looking to find an entry point. So you find a nice moving market, and then you say, right, now I've got the direction of the market. How do I enter the market? And that's essentially when you do your technical analysis and use your strategy to enter the market. Right. So the first example we'll be going through is essentially by looking how to find direction in the foreign exchange market. So the first step is to look at the economic calendar. The reason why we look at this is because it essentially tells us the economic news for that day. And because the Forex Factory actually tells us this in advance, there's no real reason why we should be trading around these areas. It's preventable mistakes, essentially. So the example we'll be looking here is on Friday, the 5th of February at 1:30, we've got the dollar. So every first Friday of the month, we've got non-farm payroll. And essentially, it's a very big news announcement, and it's a high impact. It's a high impact news announcement. So we'll be looking at what it does on the markets. You can see here in the markets, we've got huge volatility within the spikes at the news announcement, and even before the news announcement, we've got very sideways with markets. The last 4 hours, we haven't really got direction. At the news announcement, we've got big volatility in the markets, and the markets have gone sideways since then. So these are not favorable trading environments. So the best way to trade the news is not to trade at all. The best way to trade news announcements is not to trade at all. And like I said, because the Forex Factory tells us in advance, there's no real reason why we should be trading these areas. Another news announcement we want to take into consideration as well is grey events, so bank holidays. Essentially, it just means that there's no market makers there at the desk to physically move the market, so we don't be trading in low liquidity areas. Right. So now we're going to be looking at your key markets in foreign exchange. So your key markets are your dollar index. We'll be looking at your major markets as well. And you want to look at your cross pairs. And the cross pairs essentially to assess the strength or the weakness of that currency itself. So we'll be looking at the dollar index first. So what is your dollar index? Well, your dollar index is essentially an indication of how the dollar's doing in the global markets. It's a basket of your major markets. So that's your euro is heavily weighted against the euro. In fact, the USD chart and the dollar index itself are essentially a flipped image. We've also got Swiss franc, Japanese yen, Canadian dollar, British pound, and the krona as well within that index as well. So you want to look at your dollar index to establish how strong or weak the dollar's doing. And these are your major markets in foreign exchange, and these essentially these are your first point of reference to establish whether or not the currency is strong or weak. One point to make about what they're paired against. You can see here all your major markets are paired against the dollar. So the dollar is a good reference point to establish whether or not that market itself is strong or weak. So understand what the dollar's doing is essential. Without understanding what the dollar's doing, it's very hard to sort of justify whether or not a market's strong or weak. So looking at dollars first and foremost is a must, and then you look towards these markets here. So if I were to ask you how strong is the Swiss franc, your first point of reference will be to looking at the US dollar against the Swiss franc, and that market will essentially tell you how strong that market is essentially. So we'll be going through an example of looking at your major markets to establish a high quality trade. So you can see here, this is the dollar against the Japanese yen. This is Japanese yen's major market. So you can see from the white line moving forward, you can see the market is going in the upward direction, which essentially shows that we've got strength within the base currency and weakness with our quote. So we've got a strong dollar and we've got a weak Japanese yen. So this market is essentially telling us we've got a weak Japanese yen. What I like to do is I've got a piece of paper and a piece of pen. What I do is I just write JPY and I put a down arrow. So visually, I can see that the Japanese yen is weak. And this is what you essentially want to do with all your currencies. So yeah, that's something I do with that. Next market we look at is the Aussie dollar. So you can see the Aussie dollar against the USD. From the white line moving forward, we've got strength in this market. Essentially saying, again, our base currency is strong. So we've got a strong Aussie dollar and a weak dollar. So this is indicating we've got a strong Aussie dollar in the market. So same thing, what I do is write AUD and I put a up arrow, which indicates Aussie dollar strength. So now I've got a strong currency. I've also got a weak currency. If I now put those two currencies together, so we've got a strong Aussie dollar and we've got a weak Japanese yen, and we've established this currency strength from our major markets itself. If I now put those two currencies together, which is this crosspair, that is what's driving this market in this upward direction. The sole reason why this market's moving in this direction is because of the strength in the Aussie dollar and the weakness in the Japanese yen. And that's what's moving the market essentially. So what I do now is I put this market on the watch list. Now, we've established this market by looking at two major markets. You